Egyptians, going back to that point, 20 to 30% money supply growth is happening, and there's very few ways to opt out of it other than power users getting into Bitcoin.
Yeah.
Before they were competing basically with gold,
Yeah.
or smaller countries are competing with the dollar. And so they're competing with something, if it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
In every era of economic decline, there comes a moment when people realize their money is quietly losing value, not through outright theft, but via the subtle force of currency debasement. What once bought a full cart of groceries now barely covers a handful of essentials. Although the numbers in your bank account may rise, their true purchasing power steadily shrinks. This phenomenon isn't limited to developing countries like Egypt, where inflation is a daily reality. Even financial giants like the United States face the same challenge. Governments print more money to cover growing deficits, gradually eroding the purchasing power of anyone holding that currency. Monetary analyst Lyn Alden points out that some countries are experiencing money supply growth rates of 20 to 30% annually, not just inflation, but outright dilution on a massive scale. Traditionally, gold served as an escape hatch from this cycle, but even gold doesn't offer complete protection since most people still keep significant value in bank accounts vulnerable to policies that steadily chip away at their wealth. For decades, governments managed to impose this hidden tax without much resistance. But now there's a new contender. A form of money that doesn't inflate, doesn't grow arbitrarily, and refuses to follow the old rules: Bitcoin. Bitcoin isn't just an alternative, it's a true competitor. It's as fast and accessible as the dollar but without the built-in decay of traditional fiat currencies. Lyn Alden believes this new dynamic is closing the window for governments to quietly extract wealth through monetary manipulation. She rarely makes price predictions, but if Bitcoin grows tenfold from here, it could significantly disrupt the ability of states to capture seigniorage at scale. In this video, Lyn explains why inflation isn't going away anytime soon, why fiat systems are running out of tricks, and how Bitcoin could permanently shift the balance of monetary power. This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to Portfolio, tap your Solana asset, then click Close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
What all do you try to look at in terms of inflation and its adverse impacts?
One is to kind of break it up and kind of point out what it is. So a lot of people, of course, think of price inflation.
Yeah.
I prefer to think of dilution, which is, for example, if you're holding a fiat currency, developed market fiat currencies historically grow in supply by about 7% per year on average. And so even if you're getting a yield, if you're getting, say, 3% or 4%, but you're getting diluted by units by 7%, your share of the network is shrinking.
Yeah.
And then you can think of that as other things. Like, for example, if you own a stock, are you getting diluted or are you getting, or some of them buying back their own stock and you're holding up well? So it's often best to think of it in terms of being diluted.
Yeah.
And when you have that kind of foundation, inflation, like, if you look at, say, over time, money supply is growing up by 7% a year, but we are getting, say, every year we're getting usually 2, 3, 4% more productive, more efficient at making things. We see this most readily in electronics.
Yeah.
We see it less so in gold or energy or something like that, like more tangible home building. So there's a spectrum there. And so the other element of that is that basically inflation's a spectrum. And so there are some things that are close to pretty scarce. And so they actually tend to go up in price roughly in line with money supply growth.
Yeah.
And that includes fine art, that includes waterfront property. Sometimes things can go even up faster than money supply growth if you happen to, for example, predict years or decades ahead of time which population center is going to boom,
Yeah.
or which artist is going to, take off in terms of be the most popular one. But basically, the truly kind of scarce, lindy things, they kind of go up the fastest. Then you have semi-scarce things. So gold, it's increasing its supply by 1 to 2% per year. So if you map out its price performance, it kind of matches. So it's like, if you take into account the dilution, it's, slightly underperforming money supply growth, but roughly in line with its dilution rate. And then you look at oils doing something similar, but even a little worse. When you get into like agricultural commodities, they don't hold up very well at all because they're way more abundant. And then when you get into like electronics, they're outright,
Wow.
collapsing in value all the time. And so you have this big spectrum. And that actually misleads people because they think inflation is measured from zero, whereas really inflation is measured from a negative number because we're getting more productive. So prices, if we had this kind of flat ledger, like a finite ledger, prices would be going down. So even some inflation just gets us back up to zero, let alone positive inflation, which we all experience.
Do you think there is a connection between monetary inflation and, let's say, less purely economic phenomenon?
I think there are, because it hurts productivity. And one way to quantify this is, in addition, like a lot of people focus on savings being eroded, which is valid, but it's also every single contract in society gets impacted by inflation. Like imagine if you could push a button and every contract in the entire country gets shifted in one party's favor. That's what inflation does.
Yeah.
So if I was running a business making widgets and you're in a retail business that buys my widgets, we don't want to figure out every day how many I'm going to sell you and at what price. You're going to try to make a contract with me that maybe is 6 months or 12 months. And in a stable price environment, we have good foresight into what kind of pricing we're going to do. And but in a highly inflationary environment, we have to now make shorter agreements and remake those more regularly because neither of us knows what the money's going to be worth in a month or 3 months. So we have to now do more administrative overhead because money's inflating faster. And then that's true for also every single wage earner. Every single wage earner or salary worker is a contract with a company to earn a certain amount per unit of time or unit of work, whatever the case may be. And the government is able to kind of shift that contract. And so that, I think, has really big implications. And I use Egypt as an example because I lived there for part of each year. Their money supply is growing at 20 to 30% per year.
Crazy.
And so if you're operating in that environment, you're earning a wage, you're a small business. And I know wage earners and small business owners there. And I ask them, like, are you getting a 20% raise every year? Are you raising your small business prices to customers 20% every single year? And usually the answer is no. And so they're, even though they're trying to keep up, they're getting kind of diluted in the system that they operate in. And that's what really messes up the social contract.
Inflation isn't just an economic inconvenience, it's a fundamental distortion of the social contract. As Lyn Alden explains, it's not merely about rising prices, but about the very foundation of value being eroded within a fiat system. When money supply grows faster than productivity, it acts as a stealth tax that hurts savers, wage earners, and small business owners alike. But the impact goes far beyond personal finances. Inflation disrupts long-term planning, shortens business contracts, undermines trust in institutions, and quietly shifts power to those who can print money rather than those who create real value. Whether in developed economies with modest 7% annual money supply growth or in countries like Egypt facing rates as high as 30%, the pattern remains the same: wealth gradually drains from individuals and flows into the hands of the state. In this environment, the real question isn't just how severe inflation will become, but what alternatives exist to protect value. Historically, gold was the only reliable hedge. Yet gold is slow, dependent on banks, and ultimately still tied to systems vulnerable to dilution and control. Today, something new is emerging, something designed to resist inflation, avoid centralization, and not quietly fail. Up next, Lyn explains why Bitcoin isn't simply another store of value. It might be our best chance to break the cycle entirely.
How does Bitcoin then come into the picture, and is it a viable solution to this trend toward centralization we have seen in the gold era?
So I think it's by far the best shot we have. I always hesitate to say that it's like inevitable, but basically it's the most credible way we have to get past this period of centralization. So for about 150 years, we've been in the period where, going back to my prior point, transaction speeds were speed of light, physical settlement was still slow, we finally invented fast settlement. Satoshi and all his predecessors finally figured out fast settlements.
Yes.
And then, we're kind of watching that catch on. It has to go through the massive network effect. It's up against the $100 trillion network effect of the dollar, the multi-$100 trillion network effect of fiat currencies globally, the whole global bond market, and all the governments tied to it. So this little open source thing is kind of doing this multi-decade path through this very entrenched system. It's gradually succeeding. It has things to navigate. It had to, navigate big countries trying to ban it and then figuring out they kind of can't ban it. And, politicians realizing that there's nothing to gain really from donors or anyone else, from voters, for being anti-Bitcoin. But there is a lot to gain from being pro-Bitcoin. And so it's kind of going through that game theory over time. There's a couple countries that are ahead of the curve and say, well, if other countries are going to be slow and even anti, we're going to be the ones that embrace it. It still has to go through some challenges. Like, if we do have, quantum computers, it's got to be able to make that change. And that has implications for signature types and potentially even block size issues with the length of those new signature types. So it has to navigate still, I think, some challenges ahead. But it's by far the best chance we have. And it's something that it's kind of fundamental. Like even if society were to rerun this whole modernization period multiple times, kind of like how the bicycle would always come before the car, would always come before the airplane, because basically you kind of have the predecessor stuff kind of built into it.
Yeah.
We always would have Morse code before we have something like Bitcoin.
Sure.
And, Morse code could be called different. It could have a different, alphabet equivalent, but it still is basically Morse code. And kind of like how Bitcoin wouldn't necessarily have the exact parameters it has now, but something like Bitcoin, if you get to this period, would eventually emerge. And I think we want it to succeed on the first try rather than have to kind of start this project all over again. If you look at some of those older European maps, they'd be a lot more fractured than what it kind of consolidated into. And I think to some extent that kind of can reemerge in the sense that while governments will, in most cases, in most regions, still exist in various capacities, they have less of just a full control over everything. Like, for example, the full banking system is currently under every country's control. They can go around that. And they have a much harder prospect of raising capital. Because, again, if Egyptians, going back to that point, 20 to 30% money supply growth is happening. And there's very few ways to opt out of it other than power users getting into Bitcoin. And even people that have gold stashed away, they still have bank accounts. There's always still some residual stuff being just kind of opaquely taken from them by this seigniorage, this debasement. And so it really just kind of closes the window of all these different issuers around the world for how much seigniorage they can get away with. Because they're competing with before they were competing basically with gold. Or smaller countries are competing with the dollar. And so they're competing with something, if it's gold case, they're competing with something that grows at 2% a year and is really slow. If they're competing with the dollar, they're competing with something that grows at 7% a year but is pretty fast and usually gives you a yield that gives you some of that 7% back. Whereas now they're competing with Bitcoin that has zero long-term supply growth and is basically as fast as the dollar. And that's a much harder competition to go against. So I think it to the extent that Bitcoin gets another 10x or notably bigger from here and really kind of eats into fiat currency markets more, it really reduces the ability of all these different entities around the world to capture that scale of seigniorage.
Does Bitcoin make government local again? Is that the direction we're headed?
It might. I think that the more conservative thing I would say is that it makes it more transparent in the sense that there might still be communities that want more government or want less government. But at least they generally know what they're getting into. It's like they're saying, part of why we run, my talk here was called Nothing Stops This Train. I was talking about the fiscal deficits. It's because we can't agree on how we're going to balance things. So this error just keeps spilling out as we fail to agree with each other. And in a Bitcoinized world, that can't really happen. Defaults happen before that just runs forever. And so basically it says, well, we can still pay for this, but we actually have to tax for it. And so, and taxes are transparent. That's why if you go back to wars in the past, that's why even older emperors and kings would debase their coinage, because it was a way to kind of go around the transparent tax system. People revolt over taxes more than they, keep track of the exact metallic content of their coins. So it kind of just reduces the attack surface of how much can I opaquely steal from you?
Yes.
And so then, different places are free to still kind of choose how they want to govern themselves, and there still might be pockets of authoritarianism, unfortunately, but at least that opaque part is a much less viable option.
Lyn Alden's analysis offers a powerful lens on the modern economy, showing that inflation is not just an economic issue but a social one. It quietly undermines long-term contracts, erodes trust in wages and pricing, and distorts incentives by compressing time horizons. In high-inflation countries like Egypt, where money supply grows 20 to 30% annually, small businesses struggle to keep up with price changes, workers fall behind, and everyone loses purchasing power as value shifts from individuals to the state. Bitcoin enters as a compelling alternative to these inflation-prone fiat systems. With a fixed supply, open access, and settlement capabilities rivaling global payment networks, Bitcoin is more than a hedge, it's a new operating system for money. According to Lyn, Bitcoin's decentralized, permissionless, and predictable design limits the power governments have over monetary policy, placing an upper bound on currency debasement and making monetary policy more transparent and accountable. This shift goes beyond technology. It's about creating resilient financial systems that don't rely on trust in fallible institutions. If Bitcoin grows from just 2% of global money supply to a larger share, it could pressure traditional monetary systems, challenge states' ability to finance deficits, force banking systems to evolve, and encourage individuals to make more deliberate choices about their money. Do you think Bitcoin can truly disrupt centralized control, or is the existing system too entrenched? Let us know your thoughts.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.